The stock market has been crashing, to say the least, over the past few days. Now, again, I don't think this is going to lead to an end-all be-all crash, but the question is should I be buying stocks, and ultimately, what should I be buying to protect my capital and to take advantage of the dip that we're getting, because we don't really get these that often. So let's dive right into exactly what I'm doing, how I'm trading, and ultimately where I'm looking to put my money for the biggest opportunities in the market. Let's get right to work. Now, again, a lot of today's stuff is going to be on the chart. I'm not going to really do too much fundamentals. I've gone over a lot of these companies' fundamentals, and I'll probably do breakdowns of each of them specifically in the near term and future. So if you want me to break down any of the stocks I mentioned, please just comment down in this comment section, obviously, and I can break those down. But let's start off here first. Now, I want to start with SPY, so we have a ground rules of like what we're looking at and kind of what's happening. Now, a few things to understand. Right now, you currently are dipping, and I kind of think we're going to keep dipping. Now, I do think that we have some support here on SPY, and I think it's important to understand where support is so we know kind of what the expectation for the dip is, right? And so you can see that this level right here is pretty significant, coming down to 652, 653, which you almost tested there today. So we still could test that here overnight or into tomorrow. Very important to understand that. It's also worth mentioning tomorrow, we're also going to have NVIDIA earnings, which could definitely either shoot the market back up or really, shoot us back to the downside. So again, where we're looking right now. But ultimately, if we're going to see some aggressive selling, I think we have room all the way down to 613, even though, I don't think that's going to play out right now. But again, where we're at, what I see going on, but ultimately we want to hold this, 650, 652 level, so we don't have to experience any of that pain. Let's get into these names. Now, I think I have to go over one of them first and kind of put this out there. It's not going to count into my top 5. But again, I love this name and I've talked about them a lot and I make a lot of videos on them. It's SoFi though. When you go into SoFi, you look at the weekly chart, it's honestly just incredible. You're holding up your previous all-time high from IPO or SPAC was out here at like 28.5, 28.6. And as you can see, you're under that right now, but you've recently just made all-time highs literally like a day or two ago. So pretty insane to really see that. But when you come back in here, you're getting a dip right now. And your dip buying opportunities, once again, are $24.75 to $25. And then ultimately your bigger dip down to the 50 SMA would be your best buying opportunity. I don't know if we're going to get that, but I would really be happy if we did. I'm gonna let you know that right now. But SoFi as a company, I really recommend just going back, watching my SoFi video I made like 2 or 3 days ago, what they're doing with the crypto markets and how they're the first official nationally chartered and insured bank that allows crypto selling and trading. I think that's a really big thing for them. So I'd be looking at them, one of my top names, but again, not in the 5 that I'm gonna mention today. I just wanted to throw that one in there first. The first one's gonna be Oscar. I've recently made a video on this, and again, I'm going to start with the least risky and go down to the riskiest. So again, maybe you make more money on the riskier names, but again, let's jump in here. So Oscar, I've mentioned this a few times. You came down to our buy zone finally around 13.4, 13.5. And this is ultimately a buy all the way into 12.80, 12.90. And I'd even buy this near $10. But you can see going back over the past few years here, going back really into 2023, early 2024, we basically sat in this range in between 13.50 and then highs of 23 to 24. Back and forth, back and forth. Now, you might remember back in March and April, we were buying this. In July, we were buying the name down here once again. This is where we were buying it. And again, you wrote it back up and now you sold back down. So one of the bigger names that we have been trading and what we've been watching, I definitely like what they're doing. I actually think with the subsidies and what's happening with Trump with healthcare, I think this could make it more competitive of a market for Oscar. And I think they're in a really good position. It's worth mentioning right now, each quarter, they're bringing in around $3 billion, as you can see here, roughly around 3 billion, very close to it, right? Back here was a little bit lower, but more recently they've stabilized around 3 billion in revenue. And again, it's worth mentioning their market cap is roughly $4 billion, which to me shows that they're pretty undervalued. Now, again, not profitable here on this past quarter, but I'll still say I like them a lot. They also have around $3 to $4 billion cash and investments on hand, which also puts them in a really, really good position. So again, a big fan of Oscar. You can go into my deep dive as well here on the channel, but I'm a big fan of them also. Now, before I go too far, also guys, I do want to say, if you want to see what I'm trading, how I'm trading every single day, the Discord link is down below. Again, we go into our scalps, our swing trades, our intraday trades, everything along those lines. You can see profits, everything in between. It's always there for you. Again, this is where you can just see me all day, every day, what I'm trading, how I'm trading, ask me questions, be in voice chat, etc. That is there for you. That link is down below. We're gonna have a big sale for Black Friday, of course. But also too, guys, I do recommend following on YouTube, so you get all, or on Twitter, I'm sorry, so you get all the updates as well there when it comes to charts, news as it comes out, everything everything that I'm doing, what I'm doing, etc. So charts, you can see I'm posting all day there. And the bigger opportunities. One of the big trades I mentioned yesterday on there was actually Meta, about this getting below, this getting really nasty under 601, and ended up dipping down to 680. So again, I posted there as well. So it's all there for you. Just recommend following. The links are down below. So going back into our names, the next one up is going to be HIMS. HIMS, our first buy zone was really, I got a little bit near like $45, but the first buy zone was around 41 to 40. 41.5 to 40, and then now you came into your next level of 35, 34.7, which again was your previous all-time high from back in last December. Again, that has been a pretty significant level. When we broke above that, you went crazy. So again, you're coming back into that level now and you're finding good buying off that action. You go to the daily chart. We spent 3 days at this level. Again, ultimately, this is pretty decent to see that you're seeing the market dip. But again, HIMS is holding this overall level. Now, I'm not going to, play games and lie to you and say, if you break this level, it's all rainbows and unicorns, because I think this could drop down towards 28 to 26. But I ultimately think HIMS is a very good company. Going to their market cap, you can see that they're around $8.25 billion as of right now. And I think that's just a gross undervaluation of the company. Again, they're bringing in around $600 million as of the most recent quarter. Before that, around 540. Before that, around 586, around 600, and before that, around 480 million there as well. So they're bringing in a little over $2 billion a year, and their market cap is around $8 billion. That's literally only a 4x valuation. We've seen companies get over 10 to 20x and still not be considered grossly overvalued. So I still think you're in a really good position here for HIMS. I like where they're at. I like their marketing, and I think they're a really solid company as well. So where I'd be looking at them right now, they're definitely getting hit by some of the GLP drug things happening from Trump and out of the Trump administration, but I think they're in a really good position overall, and I think they're going to bounce back. I'll tell you that right now. One of my favorite names, I've mentioned them a lot here on the channel, and they're not really going anywhere. The next name up is probably the least risky of all these names, but this is LB Landbridge, and I just wasn't able to mention this stock a while back whenever I was buying it down here at 51 to 52. But now you're getting a dip once again. You dip down to 51, 52, shot up to 86, almost $90, and now you're dipping back down. I want to go to the weekly chart so you can really see what's happening here. But here again, you're coming back down to this massive area of support. And even at $60, I think it's a buying opportunity for the long haul as well. You can see this little zone right here, basically 56 down to 48. I think as a stock, it's just a fantastic overall buy. Giving you an idea of what they do. Basically, they own large plots of land, and they lease this out to oil and energy companies, and then they just rake in the profits. As you look at their earnings, you can see they went from 26 million. They've grown again into roughly, they didn't report their revenue there for some reason. That's weird. Then 36, 37. Then they went into 43, 44. 49, 48, 49 roughly. So missed earnings, but still 47, good growth. And then down to 51 million roughly. They just had an offering. That's why they're dipping down. But again, I think they're just going to keep buying more land and leasing that land set out. This is what you like to see back near that buy zone. I like what they're doing. Continued growth over time with revenue. And I think they're in a really good position. I see this getting back towards 84, maybe back even into all-time highs near $100 as well. Again, decent small little dividend, nothing crazy, but worth mentioning, worth watching. Definitely a big fan. And I will say going into 2026, you're going to see me get a lot more invested and finding cheaper gem plays as well when it comes to energy plays, land plays, and things along those lines. I still think AI and tech is going to be hot, and I still think you're going to make a lot of money from those. But I'm going to tell you right now that I think energy is going to be one of the biggest, if not the biggest play over the next 24 months. And I think there's a lot of potential there. Again, I'm not looking to hold this forever, but again, as a day or a swing trade over the next few weeks, months, I think it's a fantastic play as well. Definitely keeping my eye on it. Massive fan of this one. Okay, now we're going into more of the riskier names. Okay, and for one of these names, you're going to be able to pick your own too. It's worth mentioning I've made a video on both of them more recently, so we'll go into that. But first off, we'll go into Tempest AI. Now Tempest AI, when we talked about this originally, was at 91, almost at $100, and we talked about we wanted to see the dip down towards the 200 SMA. Well, we're here now, right? It's been a few, 3-4 weeks, and now we're at the 200 daily moving average, and you're trying to find support. So again, as you're coming into 66, 67, this is a really nice overall area. I would like to see this hold on the daily. If you break below this, this could get a little bit ugly. You could drop deeper down into 56, maybe $54, but I would still ultimately be buying this as well. It's worth mentioning their revenue is growing pretty rapidly, right? Slower in the beginning, 165, 180 into roughly 200. Again, pretty slow, consistent growth. Then ramped up a lot here, obviously from 200 into 255. Then you go into 314, and then you ramped into 334. A little bit slower here, but again, what you like to see. And the EPS is showing that they're very close to being profitable as well, which is really what you like to see there as well, because a lot of these, AI companies that are going full send, full growth, they're not making a lot of money, which you'll see here in a second. But I still think Tempest AI is a good overall company. You're buying the opportunity down here. Again, I do think the riskier names as far as Tempest, Nebius, CoreWeave, some of the names I'm going to mention here in a second, I think they are risky and they have downside risk, but I would still be watching them very closely. And I still think they could really start running as well, because again, we're really starting to see some of these names who are really start to hit the J curve as far as it's concerned, as far as revenue. So I'm still a big fan. But again, I would be stupid to not address the risk that is associated with some of these names. I want to make that very clear. Okay, the next name, this really goes into two. You pick your poison, what you like more. Okay, Nebius and CoreWeave. Okay, so I'm going to go over both first. And again, I recently made a video going over both of these names, so you can go watch that video if you want to get a deeper dive. Nebius is the name that I like more personally. Again, you're getting back above this $87 level. If you can hold above this, I like it a lot. Again, and this is one of those names that I kind of like had to come to terms with. If you dip, I'm going to buy more. But I wanted to kind of just get started with the position here. And I really do believe in what they're doing as far as the contracts and where they're going to be going as far as revenue is concerned. I'm overall just a really big fan. So if you look earlier this year, they were doing 55 million again, and then they came out and reported 105. So great growth there. And then to roughly 150 here as well. And then they also explained in their earnings statement, basically they couldn't make more money just due to constraints of overall supplyability. The demand was there, the contracts are there, the money is there. They just this is the max that they can fulfill right now. So it's really more of an infrastructure play right now. Can they build out? Can they start fulfilling demand from Meta and Microsoft and those big deals there? But again, I do think this is going to be one of the bigger plays as far as data centers are concerned. And I still think it has a lot of potential in the grand scheme of things. And this could easily start running back into highs, especially when the market gets going once again. I know everyone's kind of freaking out, but again, my personal opinion, you have to take a little bit of risk of buying names on some of these dips, and I'm a huge fan of Nebius. I would love to see it come down to 76 for a better buying opportunity. I will definitely be buying some there, and the 200 daily moving average near $60 as well. Now, obviously, attached to Nebius is the other name as far as CoreWeave. And CoreWeave is interesting. Okay, it's very interesting because I've gone into their earnings, outlook, etc. I don't think CoreWeave is as juicy, as interesting as Nebius. I'm going to be totally honest. That's just my personal opinion. I think there's a little bit more risk associated with CoreWeave. You're breaking back down and you're pushing back into IPO highs back here near 64. I think that's going to hit most likely. But it's worth mentioning, if CoreWeave comes down, likely Nebius follows as well. They move pretty much in sync and they move kind of in the same direction. I think Nebius is holding up better. That's a personal opinion. But things can change obviously at any moment. But again, where you're at overall in CoreWeave, that's your buying opportunity. If you get below 64, I think you run for the hills. You can't really do nothing with this name under 64. It's going to be a tough play, and it's likely this thing comes crashing back down if you lose that level. I also want to give you another example of something like Figma, which is a different company. But again, this was one of those IPO names that ran and then kind of just blitzed all the way back down, which was really ugly. And a lot of these IPO names that went, IPO'd recently and went boom, are all going kaboom now. So worth mentioning. But going back into CoreWeave, where you're at, big risk under 64. Above that, I think it's a decent opportunity as far as the technicals are concerned. And again, I think, AI bounce back, the market bounce back, NVIDIA has earnings, a lot of stuff going on. Definitely stuff you're going to want to be tracking, and CoreWeave can easily start getting buying back in the market very, very quick. I'd be a fool to say that. I'm not saying it's a bad company. I just like Nebius more. That's just my personal preference of what I'm watching there. Now, going into Figma, actually, it's funny. Again, I'm mentioning a bunch of extra names. These are all extra now. I do think Figma is becoming a pretty great opportunity, to be honest. As far as revenue is concerned, they're making pretty damn good money. They're growing, and they are literally just going straight down into 36. Again, be careful. I'm not telling you to full send. They're going literally straight down. You got to be careful. A competitor as far as Adobe is a very similar chart, not as aggressive on the downside, but still coming basically down to the ground. But again, where you're at right now, Figma is dropping, Adobe is dropping, and I really do believe Adobe and Figma are going to be really solid buys overall. I think you're finding opportunity in this, and it's kind of crazy. Like some people will say, well, Tyler, a lot of these names are overvalued, the stock market, this and that. But I still think there's a lot of names in the market that are, that didn't really run over the past few months. Like Adobe's gone straight down. It's still a great company. It's still a solid company. It's making really good money. You look at these earnings, just gradually holding around that $6 billion range. Really solid. I can go to CRM as well, sitting down here as well with earnings that are pretty solid, $10 billion, slowly grinding back up as well. So again, what you really like to see here, that there is names that are dipping. There are good opportunities out there in the market. You just really got to be looking and, hopefully knowing what to look for instead of looking at just trash names. But again, where we're at as a whole and kind of where my mind is and what I'm thinking about doing here right now, hopefully that makes sense to you guys. If you have any questions, comment down below. Let me know your thoughts. As always, I'll respond to all your questions. The Twitter is the best way to get a hold of me if you ever have questions on charts and things I'm going over. And maybe I can even do a chart request or two. If you request, if it's a good looking name, I'll probably chart it. So if you have a good one, guys, I'll see you in the next video. Hasta luego.